Welcome back to Alpha Recap. Kristen here. We're recording after the close, and today we're unpacking a few big threads. Nvidia's optics bets, some momentum in photonics stocks, and a sobering quarter from Berkshire. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Excited to dig in. There was a lot packed into today's headlines.
All right, let's start with the headline everyone's talking about. Nvidia put real capital behind optics suppliers. Tell us what happened.
Yeah, so Nvidia announced a multi-year push into the optics supply chain. They made an equity commitment to Lumentum and earlier did the same with Coherent. Both big strategic moves to secure lasers and photonics capacity.
They actually put money where their mouth is. How much are we talking?
Well, the Lumentum move included an investment of $2 billion. And there was an earlier $2 billion tied to Coherent. So what really stands out here is the scale. It's not a token investment.
That's huge. Why is Nvidia doing this instead of just buying more GPUs?
Great question. I mean, when you step back and look at this, the bottleneck for scaling big AI clusters is shifting. It's not just compute anymore. Optical interconnects, lasers, and energy efficiency are becoming central constraints. If you can't move data fast and cheaply between chips and racks, GPUs can't do their job efficiently.
So it's about the wiring between everything, not just the engines themselves.
Exactly. And Nvidia's play is both defensive and offensive. They're trying to lock capacity and shape supplier roadmaps so their own systems scale more predictably.
And this connects to another stock story, POET Technologies. Institutional investors were buying in today, right?
Right. Institutional buying popped up in POET Technologies. That matters because it signals some funds think silicon photonics is moving from lab pilots to real commercialization. People were pointing to improving unit economics and customer pilots as proof points.
Short reaction.
Big move.
Hold on. Say that again. Proof points?
Customer pilots, roadmaps toward optical engines for hyperscalers, and better unit economics. Those operational signals reduce execution risk compared to hype alone.
And institutional buying can create momentum.
Yeah, that tracks. As long-only funds allocate, it can improve visibility and make future capital raises easier for these companies.
But there was a counterpoint in the day's news, too. Berkshire had a rough quarter.
Yep. Berkshire reported a nearly 30% decline in operating earnings in the fourth quarter of 2025. That's Warren Buffett's final quarter as CEO, so it got extra attention.
Wow. Not a small miss.
No, it's substantive. Operating earnings are supposed to show recurring cash profitability excluding investment mark-to-market swings. So a near 30% drop forces investors to re-examine normalized cash generation and capital allocation plans.
Short reaction.
Honestly, I was a bit surprised by this one.
Let's step back and synthesize. We've got optics being validated by Nvidia, stock-level confirmation in POET, and then a reminder that fundamentals still matter via Berkshire. How do you see those threads interacting?
Three dynamics. 1. Optics now matter strategically for AI infrastructure. 2. Markets are responding with stock selection and institutional flows into names like POET. And 3. Company fundamentals and governance events can derail narratives, which is what Berkshire's drop and a bunch of 8K filings reminded us.
That makes sense. Some folks say optics is the next systemic bottleneck. Others say it's just an industrial problem that markets will solve with price signals. Where do you land?
There's a debate. If the bottleneck is long duration, suppliers get pricing power and outsized margins. If it's transient, prices and margins mean revert quickly. Nvidia's investments push the needle toward a more durable constraint by aligning incentives and accelerating supplier capex. But it's still a multi-year story with execution risk.
Let's add a little color for listeners who aren't deep in hardware. Explain the economics of interconnects in plain terms.
Sure, think of a data center like a highway system. GPUs are the cars, but you still need roads that are wide and efficient. Optical interconnects are the superhighways. As models get bigger, you need more bandwidth and lower energy per bit. Right now, those optical components are expensive relative to compute, so improving bandwidth per watt through photonics can lower total cost of ownership for cloud providers substantially.
Nice metaphor. Okay, practical questions. What should different investors be doing after today?
Short version, tailor your approach. Long-term growth investors should tilt selectively to optic suppliers with durable tech moats and visible hyperscaler demand, but stage exposure by operational milestones. Value and income investors should watch Berkshire closely and avoid assuming 1 weak quarter is permanent. Active traders can trade the volatility in optics names around pilot and supply news. And governance watchers should track the spate of 8K filings we saw today for possible catalysts.
Let's be specific. What are the key data points to monitor in the short term?
Track supplier CapEx guidance, wafer starts, lead times, and backlog for lasers and hybrid photonic parts. For POET, watch pilot win announcements, unit economics disclosures, and qualification timelines for hyperscaler optical engines. For Nvidia, follow purchase commitment cadence and delivery timing. And for Berkshire, watch forward guidance and segment breakdowns that explain the fourth quarter drag.
Got it. One tactical question. How should investors size exposure given the execution risk?
Staged exposures tied to milestones is the right move. For example, allocate initial capital on proofs of concept, then add on volume orders or long-term purchase commitments. That way, you capture upside if commercialization accelerates, but limit downside if rollouts slip.
Short reaction.
Right. And the other thing is...
You get the floor. Finish it.
The other thing is macro overlay. If optics constraints hit at the same time energy costs spike or geopolitical risk rises, multiples could reprice fast. So keep a macro overlay on your thematic bets.
Before we wrap, any quick notes on those governance filings people should care about?
Yes, there were a lot of 8K and amended 8K filings from smaller companies today. Turning Point Brands, CCC Intelligent Solutions, News Corp, DNA-X, Macerich, CareTrust, Zymeworks. These can be catalysts, changes in governance, acquisitions, or disclosure events that create idiosyncratic winners or losers. If you're an activist watcher or event investor, the accession numbers are a starting point for deeper due diligence.
Final quick takeaways for listeners.
3 crisp takeaways. 1. Nvidia's supplier commitments validate optics as a strategic piece of the AI stack. 2. Institutional buying in POET suggests commercialization is closer than some thought, but execution remains multi-year. 3. Berkshire's near 30% operating earnings decline is a reminder fundamentals still matter and can quickly shift investor sentiment.
Perfect. If you had to sum it up in one sentence.
The market moved beyond a GPU-only view of AI. Optics and energy efficiency are now central, but you need calibrated exposure and active monitoring to navigate execution risk.
Great note to end on. Thanks for joining and breaking all that down.
Thanks. Always fun to unpack these threads.
All right, folks, quick reminder on next steps. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you next time.